Namaskar and welcome to this Dhanteras special on Business Today television. I'm Sakshi Batra and today we are talking about the precious metals that have been shining the brightest this festive season, gold and silver. As we step into this new Samvat year, the precious metals have once again proven their mettle, with gold delivering steady outperformance and silver also adding that extra sparkle to investors' portfolios this time around. The big question though is, will this glitter continue in the new Samvat year as well? And to decode that for you, we have the most auspicious time to invest in a stellar panel also joining in as well. We have Mr. Suvankar Sen, the MD and CEO of Senco Gold Diamonds, joining in on the platform with us. We also have Sugandha Sachdev. She's the founder of SS Wealth Street and she's also joining in on the program. Warm welcome to both of you, and shortly we'll also be joined by Chirag Mehta, CIO, Quantum AMC as well. First up, I want to wish both of you a fantastic upcoming Dhanteras and Diwali and the New Year as well, and may this year turn out to be a superb year filled with prosperity and all the profits that all your investors want to make on your investment advice as well. So thank you so much for joining in. Sugandha, I'm starting off this conversation with you. You will be the happiest this year. Gold and silver have outperformed all the other asset classes by a huge margin. Every day you wake up and you see a newer high, newer record level. Almost 50 records have already been formed in this year alone by gold itself. Some of the silver ETFs have in fact doubled investors' money in this year too. So over 100% rally is what we've seen, especially in the last 1.5 months. The silver rally has really surprised many at this point in time. I want to begin by understanding from you, how are you looking at this unstoppable rally in gold and silver, and also will this continue post Dhanteras and Diwali, or will there be some profit taking there now?
Yeah, hi Sakshi. First of all, wishing you, your entire team, my co-panelists and all the viewers a very happy Dhanteras and Diwali. Hope this year turns out to be very profitable for all of us and the viewers as well. So talking about gold and silver, I think it's been a watershed year for precious metals. Both gold and silver are glittering brighter than ever, not just as a cultural symbol, but as a financial anchor also. And gold has become most sought after asset this year. It has kind of outperformed most other assets. Traditionally, we have viewed gold as a consumption asset, but now it is a trusted financial investment. So while physical gold has remained deeply rooted in India's culture, but then we are seeing a noticeable shift. Now the millennials are driving this change wherein they are investing big time into gold through ETFs or through mutual funds or digital gold. So I think there is a big shift here in terms of the investment culture that we are seeing in India and globally also. Investors are turning up to gold with the strong inflows that we have seen in gold ETFs. So there have been a lot of factors which have fueled this rally this year. It's an era marked by tariff war, the recent shutdown of the US government, the geopolitical risks, and the monetary easing cycle of the US Fed. Apart from that, it's been supplemented by strong buying from central banks, which have continued for last 4 years, where they have been buying upward of 1,000 tons. And then this year also, the figures are likely to be more than 1,000 tons. So if I just talk about one figure, earlier prior to 2022, central banks were buying just 500 to 600 tons. But then for last 4 years, once the Russia's dollar assets were frozen in 2022, there has been eroding confidence in dollars. So we are seeing a tectonic shift across continents. Dollar is losing its dominance and it's becoming a multipolar world. So this is a major shift which is likely to continue in years to come also. And this wave is de-dollarization theme. This is likely to continue, and we are seeing a structural bull run in both gold as well as in silver. So silver is also becoming the people's metal. Why? Because it offers the monetary security of gold as well as the industrial leverage of growth. We see silver being used in a lot of industrial applications, the new age technologies, be it the 5G technologies or the solar panels or the electric vehicles. So wherever these rare earth elements are used, silver is also used. So now it is a critical mineral. US is already included. It's in critical mineral list. So this theme is likely to continue for a very long time, I think.
For a
the
very
structural
long
bull
time.
run will continue. Yes.
Okay. Let me also ask Mr. Sen, because he's the one who is actually witnessing the demand on ground. Mrs. Sen, last 4-5 months odd, we've been seeing a substantial surge in both gold and silver prices. Tell me, this Dhanteras, what is the expectation? What is the kind of footfall that you are getting on the ground? Is there still a lot of demand? Are customers still buying at all-time high levels when it comes to gold and silver?
So if we look at the footfalls at the stores in the current last 10-15 days, I must say that at these high level gold prices also we have seen almost a 2.5 to 3 times jump in terms of footfall. So that is a very good sign that consumers at these levels are also continuing their interest towards gold or silver, and it must be because it has given them the returns for all the gold and silver that they have been buying over so many years. So I think that they should be the happiest people today as we see the gold and silver prices rising. In terms of the expectation of sales, in terms of the value terms, we are quite, I think, as an industry, expecting a 20-25% rise in terms of value. But at the same time, we must, the reality is that prices are high. Consumers have increased their budgets, but not to the extent of the jump in price rise. So in terms of volumes, we will see a dip, that people are looking for more lighter weight jewelry. People are looking at lower caratage, so 18 carat, 14 carat, 9 carat, whether it is plain gold or diamonds. People are looking at jewelry that looks heavy, weighs light. So we will see about a 15% odd fall in terms of volume, but in terms of value, with the records that are being broken every day, we are expecting a 20 to 25%
Okay.
all in the business.
25% growth in sales this Dhanteras. Okay, let's also ask you, Sugandha, when it comes to this entire new Samvat year's expectation on gold and silver, what are the targets even beyond these more than, expectation kind of levels that we are actually seeing at this point in time? What is your expectation for the new Samvat? Where are you seeing gold and silver headed?
Sakshi, I see gold prices heading higher towards $47.70 to $4900 per ounce. And if I convert it into domestic market, I see levels of 145 to 150. So maybe this could be seen this year itself, because we have been revising our targets multiple times. I think nobody was expecting this kind of a move in this year only. My targets for next year have already been achieved. But yes, now my targets are 1,45,000 to 1,50,000. But yes, with the caveat, probably they could be achieved by the end of this year itself. Though I'm looking at them for the next year, there could be a break in between in this rally, because it's already been a spectacular rally. It's a parabolic move. So there could be some profit booking after Diwali. But yes, the overall trend still continues, and we have calculated these targets. These targets look quite possible. So we may not see the kind of returns that we have seen in this year. These are the historic returns that we have seen after 1979. So probably the pace of gains in gold and silver may not be the same as seen in this year, but yes, the outlook is still very positive. Probably gold and silver both may go into some consolidation phase, but then again, from lower levels, we are expecting a lot of renewed buying interest, because this new wave of buying, which is coming from central banks or for
Sure.
retail buyers, this is likely to continue in 2026. Obviously, there would be a lot of factors that would be playing out, how the tariff war plays out, the monetary easing cycle of the US Fed, and the geopolitics. All of these have to be monitored, but yes, the structure seems very positive even now because of the de-dollarization theme, which is likely to continue in
Yes.
years to come as well.
So 1,50,000 is your expectation that could also come in this year itself. For gold, what is your target for silver?
See, silver, Sakshi, I'm looking at levels of around 2 lakh to 2 lakh 15,000. See, silver, there is an interesting fact. We have already seen gold testing multiple peaks this year. In fact, after 27% rally in 2024, this year again, gold prices are soaring higher with around 67% gain. But silver, after 2011, this is the first time silver has reached this $50 per ounce mark. So it's a 45-year breakout. These levels were seen prior to that in 1980. So this is a shifting trend that we are seeing in silver. If I look at the chart structure also, there is a rounding bottom wherein we have seen a breakout of that. And also it is backed by strong industrial demand, so which is likely to continue in years to come. And this is just the beginning. I think we had spoken earlier also that we were very bullish on silver for this year, much more than gold. This has actually played out very well. And this is likely to continue because this breakout means targets of around $75 per ounce initially, and I also see silver heading higher towards $100 per ounce. Timing is a slightly difficult thing to predict. Maybe 100 ounce could be seen in 2 years' time, or maybe probably 1 year's time. But my base case is $75 per ounce, and in domestic market, 2 lakh to 2,15,000 is the range that I'm looking for silver for next year.
Okay, after a brief pause, there could be a continued rally in silver as well. In fact, Sugandha believes that over the next 2 years, you could in fact see doubling of silver levels from the current $50 to almost $100 as well. So the rally could well continue. Let me also welcome Mr. Chirag Mehta, who is also the CIO of Quantum AMC, now joining in on the program with us to share with us what exactly has been the demand as far as the financial way of investing in gold and silver is. At the outset, Chirag, warm wishes to you for Dhanteras and Diwali. Do help us understand, in this current Samvat year of 2081, how have people invested via mutual funds, via ETFs in gold and silver, and what kind of a trend have you seen shape up vis-a-vis the previous years?
Thank you, Sakshi, for having us, and wishing you and all your viewers a very happy Diwali and very happy Dhanteras. Uh, on the investment side, I think it's been an incredible run that we have seen. We have never seen ever before such buying since 2007 when gold ETFs started in India. This has been something we have not seen before. Last month itself, we saw 8,300 crores come into mutual fund gold ETFs just in last month, 1 month. And if you look
Wow.
at this year, it's been about 24,000 crores of buying that we have seen in gold ETFs just this year alone. So it's been, you could say that this signals larger receptivity to gold as an asset class and to gold ETFs as an instrument of choice when it comes to investment. I think people are believing and now have understood that you need to differentiate between what is for consumption and what is for investment. Earlier, there was a very thin line between the two. Now, people are demarcating, or investors demarcating very clearly that what they need to buy from a jewelry point of view for consumption. And when it comes to investment at a portfolio level, they're choosing more wiser choices and efficient choices like gold ETFs. And we think that this trend is here to stay. If you look at globally, it's not new. Since the global financial crisis, we were saying that we will see increasing trend of diversification of reserves and investments into gold, which accelerated post GFC. Then it kind of caught again attention when Trump's first term was there, and then COVID further accelerated the trend. And now with the geopolitical thing and Russia-Ukraine war, it's significantly picked up pace. So we think that this trend is here to stay, and incrementally you will see more buying happening in gold ETFs and gold funds in India. This is the trend that we think that will help investors as well, because gold has been a great portfolio diversifier, and if you buy it more efficiently, it adds on to your returns as well. So I think it kind of addresses both the issues that investors were grappling with, and at the same time it is extremely liquid and you don't have to worry about purity of the gold as well. So
Absolutely.
it ticks all the marks for investors, and I think this trend is here to stay.
This trend is here to stay. So unprecedented year in terms of flows that we have been seeing via ETFs for gold and silver this time around, and the trend is here to stay. Mr. Sen, I'm coming back to you, and I want to understand, we see two major, periods of buying in a year for, gold and silver. Of course, Akshay Tritiya, Dhanteras, these are the two occasions that we see. And this is followed by, the festive buying is followed by a lot of wedding purchases as well. Could you give us a sense of how, people have been looking forward to their wedding purchases because of these surge in prices? Have they been holding on some of the big ticket investments that they usually do towards this time of the year? What exactly are you looking at?
So what we saw with the wedding buyers is that in the month of August and September, when the prices had been just begun to increase, I think consumers were waiting and watching whether these prices would be sustainable or not. But now that we are right at the peak festive season and Diwali Dhanteras is right around the corner, I think wedding jewelry buyers are in the market. Now I think they've lost their patience and they think that prices are going to move up higher, and they have started placing their orders and buying the necklaces and bangles for their weddings, which has been the big ticket size item buyers here. However, we can see that one trend that has come out very largely is that the old gold exchange, which usually is in the range of 30-35% of the overall business and sales, has gone up to close to 45 to 50% of the overall business and sales. So consumers are buying big ticket size, but they're also utilizing the old gold lying in their locker and which is not utilized by them in exchange of buying the new jewelry. So this is one trend. And lighter weight, something that looks heavy but weighs light, within the budget of the consumers, whether it be 1 lakh or whether it be 5 lakh or 10 lakh or 20 lakhs. This is something that consumers are asking at the store, that within this amount, how much big and spread out it might look at. And that is where, whether it be 22 carat or 18, 14, 9 carat, the purity is also one aspect. So when it is diamond jewelry, traditionally it's been 18 carat jewelry that has been sold. Over the last 2-3 years, people are buying 14 carat purity, and now 9 carat as a purity option is also there. And for plain gold, people are comparing between 22 and 18. So this is how the consumers are trying to make up for the increase in price with either lower purity or lower weights.
Okay, Sugandha, coming to you now, help me understand. A lot of our viewers have actually felt a large part of FOMO over the last few months because they never thought that gold and silver could surpass their imaginations in the last couple of months that they have seen. Beyond 1 lakh, it already looked too expensive to hold and to buy. But look at silver nearing 2 lakh rupees now and 1.3 lakhs for gold per 10 grams. What are you advising investors at this point? Should they go ahead, invest at these all-time high levels, wait up for that pause that you were expecting, and what should one really do with their investments? Remember, Sugandha, we've been discussing for far too long that usually a 10-15% allocation in your investment portfolio goes to gold and silver. So the second part of the question is, does that change with this kind of a super bull run that we've seen in gold and silver this time?
No, Sakshi, the allocation should not change. For years, I've been advocating a 10 to 15% allocation towards gold and silver in one's portfolio, and this should continue even now because gold has a ability to preserve wealth during volatile times. So we are still seeing gold is mirroring the global fragile economic environment. So this is likely to continue. See, we have fears of tariff war, we have geopolitical uncertainty, we have monetary easing. All of these factors, the confluence of these factors still calls for a 10 to 15% allocation. Sakshi, if you remember last time we spoke, I maintained that we can reduce our allocation to gold and increase it silver for higher returns. So this can be done, but then the overall allocation in gold and silver should continue to 10 to 15%. See, gold has been protecting your portfolio, but now it is also being viewed as a good investment tool. So it is generating high returns also. If I talk about the absolute returns in last 20 years, it's almost 1700%. If I talk about 5 years CAGR, it's almost 17.5%. So kind of returns that we are witnessing in gold and silver, this may not continue forever, but then you can expect a CAGR return of around 11 to 12% in years to come as well. So one should continue. Yes, one can reduce allocation slightly to silver and increase to gold now. If we see the gold silver ratio, it has come down from a peak of around 107 to 78, wherein 78 was our expectation, and we have already seen that. So now gold may outperform silver in times to come.
Okay.
But overall, silver is still very positive, and one should continue with their allocation of 10 to 15% in everyone's portfolio.
Okay. Coming to Chirag now. Chirag, help us understand the trends going forward in the new Samvat year as well. Since you do say that the trend is here to stay, investments via ETFs will continue as well. For those who have had no exposure via ETFs to gold and silver, many of the fund managers have also faced this kind of a miss, and they do regret not having had enough exposure to gold and silver to diversify their clients' assets as well. So how are you looking at it? What would your advice be to an average investor watching you right now, via ETFs, via mutual funds, how to go about gold and silver investments? What's the best way?
So 10 to 15% is the ideal allocation, because at that level, you do not compromise on portfolio returns and your risks reduces significantly. It augments portfolio returns and reducing the risk. So that is an ideal allocation one needs to have. And I think everyone is under allocated to gold significantly in India. Despite being a gold loving country, we are not as exposed as we should have been. So from that perspective, if you don't have anything, if you have zero gold allocation from a portfolio perspective, then probably you need to buy at least a fourth now and probably then stagger it out your investments over next 1 year, maybe buy the dips. Because though all factors are very very supportive of gold, they you can't rule out a correction. Like in the heydays of 2008, when everything was so supportive of gold, gold got sold off by 30% just because everyone wanted liquidity. Liquidity was frozen across the world, and only thing that you could sell was gold to fund losses in other asset classes or to fund margin calls. So you can't rule out a correction, so you could wait for a dip. But I think the all factors longer term basis are very very supportive of gold's rise. Gold should continue to be well supported because of these fundamental factors like dollar de-dollarization, or be it it's a more last it's used very vaguely in some sense, but there is a shift out from dollar, and we are numbers tell us that every 1% shift out of dollar at $4,000 an ounce level, gold demand increases by 530 tons. So it's a huge demand number that you could get for every shift that you see out of dollar, and hence that trend is here to stay, which will lead to support for gold prices. And also fundamentally, the structural problems of deficit and debts have not gone away. So fundamentally, it looks positive, well supported, and hence you should be buyer on every dip, and some you should buy this festive season through ETFs.
Okay, fantastic. Thank you so much, then Chirag. Thank you so much, Mrs. Sen and Sugandha, also for being with us on this special edition. We could have just gone on discussing, but we are way out of time now. Thank you so much for your time, and I wish you once again a great Dhanteras and Diwali. Once Dhanteras and Diwali is done, we can catch up again to really find out the trends, and of course get back to understanding how the major trends are shaping up in the new year as well. Thank you so much. Appreciate all of views on this special edition. Alright viewers, we'll wrap it up on that note when it comes to Dhanteras special. So clearly the trend is here to stay. Gold and silver, allocation of 10 to 15%. Higher levels for gold and silver expected over the next 1 to 2 years as well. But there could be some pause after this way running up rally that we have been seeing at this point. But stay tuned with us on Business Today Television. Our festive coverage continues on Dhanteras and Diwali as well. And don't forget to catch all the action of Motor Trading Live on October 21st with us on Business Today Television too.